Madam Finance Minister, I want to engage with you on your understanding of the nature of the slowdown that we've seen in the Indian economy. In the second quarter of this fiscal, we saw growth slip to 5.4%. Now, the government has been saying that this is not structural, this is short-term, it is cyclical, and from Q3, Q4, you see an uptick. My question then is, your chief economic advisor has set a target for next year's growth between 6.3 and 6.8%. If the government's core conviction is that the slowdown in growth is just temporary, why is the growth target for next year so moderate? If you actually believe this is temporary, shouldn't this be more than 7% at least? Why are you being conservative? Secondly, Prime Minister Modi's ambition of turning India into Viksit Bharat by 2047 requires real GDP growth of more than 8%. If we are 150 basis points less than where we should be in terms of achieving our target of Viksit Bharat, do you then run the risk of this ending up potentially as just another election jumla?
First of all, I think if you're only constantly looking at within India, economic survey, your assessment, and won't we need 8%? Yes, you can always point out as though it is a ceteris paribus otherwise. It's a lab-like situation. No, you're dealing with an ever-changing global scenario. Containers are not available. Oil's export is now going to be speculated upon. You have also Middle East oil coming back. You have America probably going into shale. The relationship between Canada and US. Russia getting more sanctioned. These are also very serious matters which can have a bearing on India. Your oil imports, movement of goods, the impact of China being put under tariff and sanctions by the US, the excess capacity which is sitting in the Chinese economy, and they not finding a market in the developed countries, will they go about dumping it into India? Therefore, when you're looking at predictions, just keeping Indian factors, it's one thing. But there are things which are happening, not one, not two, several things happening simultaneously, all of which are adding to the downside risks. You need to have your numbers be realistic.
And the nature of the slowdown, Arvind Subramaniam, the former chief economic advisor, says the government's misreading the slowdown data. It's a structural slowdown. This is not temporary. It's not cyclical. His argument, and that's what I want to understand from you, his argument, his critique is this is a structural slowdown. The government is not telling citizens the truth about the nature of the actual slowdown.
Well, observers of Indian economy, I'm not undermining their importance, did give us solutions during COVID. We heard them out. We have not rejected any of their ideas. But we certainly didn't take them up for implementation. We chalked our own course. So I will do it similarly. When your fundamentals are strong and when your currency is strong opposed to all other currencies, just in relation to dollar, because of the dollar's peculiarity, we suffer. And that is not the situation just for the rupee against the dollar. It is about every currency. The Japanese yen, Korean, every currency against the US dollar has that problem. Now, if your currency is fine and fit, except for this volatility with the dollar, can it be so if your fundamentals are weak? Can it be so if it is systemic problem? He can show immense number of data and say it. I'll go through them with all earnestness. But it cannot be, India cannot be the fastest growing economy continuously for the third year, and even World Bank predicts next year too, if your systemic problems are grinding to a halt, making the fundamentals to come to a grinding halt. So I'm sorry, there can always be one or two areas on which some advice has to be given. We are willing to hear. But to press the panic button saying, oh, there is a systemic problem, it's coming to a halt. No, it's not.
But ma'am, on one hand, the government keeps talking about India being the third largest economy. But on the other hand, the per capita income is not, that the India should be boasting about. So what are your thoughts about that? You think that only talking about the third largest economy, growth of the economy, it's not enough. It's also important that the per capita income is affected by that.
I don't want to sound textbookish. I don't want to sound simplistic in my answer. A country with 140 crore people. Yes, the GDP has to grow, but within 10 years, has it grown enough to bring the per capita income of 140 crore people to match up with countries where the population is far lesser? So when we take an indicator, we should understand that we also, as much as we proudly speak about the demographic dividend that India can have because of its population, it equally also tells you that the pie has to widen and grow faster for your per capita also to match up that level. So you can't keep telling me, but your GDP has to grow, but why is this? They're all interlinked. So I cannot aspire to have a per capita income much better than less populous countries. These are hard realities. There's no point in me answering first question, whose linkage is with the second question differently. The answer will have to be similar to the first question's answer. They're linked issues.
Finance Minister, one of the notable things about budget formulation under your charge, you've done 8, but particularly after COVID is, despite everything, you have maintained a fiscal consolidation strategy. And we are perhaps amongst the only major economy in the world which has maintained fiscal consolidation, even as what we have seen with other countries and their inflation rates. Are you disappointed that international rating agencies, including Moody's, are perhaps not taking into account the kind of effort on fiscal discipline that Modi Sarkar has been following for so many years?
Yes, fiscal discipline, transparency, and looking futuristic towards how to manage your fiscal with a deep look at how your debt is managed. Before I go into that, I'll draw the attention of this august audience. The fiscal deficit number for the coming year, 25-26, is 4.4, because that's the glide path we had given ourselves. Under 4.5 we will reach. The much talked about capital expenditure makes up for 4.3% of our GDP. I'm sure you in the audience will immediately understand where I'm going or where I'm coming from. If my fiscal deficit at 4.4 is almost the same as my public expenditure to the GDP on capital assets, 4.3 that is. What does it say? Fiscal prudence, about which you rightly point out about Prime Minister Modi's leadership, maintaining that discipline, transparency, but also the quality of public expenditure, the quantum of it in relation to the GDP. If it's matching with your fiscal deficit, it means you're borrowing only to spend on capital expenditure, creating assets. So the deficit, which is nothing but your borrowing, is going towards capital asset creation. We are not spending money to service our loans or to pay salaries or to service or to repay the loan and so on. That itself is a major big point. I would think, despite COVID, when we had to borrow money, we have soon shown you that fiscal discipline, without cutting down on any of the social welfare schemes and without cutting down on public expenditure in capital assets, now equals just that fiscal deficit number. I would think this is, observers of Indian economy, whether they are credit rating agency or anybody else, should look at this. I wouldn't think anybody else other than Prime Minister Modi, with all his experience as the Chief Minister of a state like Gujarat, and now as Prime Minister, now the third term as Prime Minister, unless he is a keen watcher of the economy and guiding us on it, we would have been in a position to achieve this.
Ma'am, a quick follow-up because you brought up states and Gujarat. Recent ranking by Niti suggests that there are certain states which are slipping when it comes to their state-level economic performance. Andhra Pradesh is mentioned, Punjab, West Bengal, Kerala. The union alone can't get India to grow. What is their responsibility? What would you say in this regard?
Well, I think this has been said at the center to state level talks one-on-one with the states. I wouldn't want to comment on it in a public platform, considering that when it comes to the question of certain national interest matters, it is not with a political motive that one speaks. India's development, India's fiscal situation, India's debt to GDP, India's effective spending on capital expenditure, these are matters for all of us to be equally worried. And I would think, honestly, the points which I'm trying to highlight to you, even in the earlier question, about indicators to a healthy Indian economy, on which Prime Minister Modi has given attention to each one of them: capital expenditure, transparency, fiscal deficit being managed well, money being spent only where it is required, and taxpayers' money being made or being used responsibly. These are principles for everybody. These are not just a BJP or Prime Minister Modi. It has to be in every state. And unfortunately, some of our states will have to introspect and get their act together.
Ma'am, I cover the stock markets for Business Today, and I have a question related to that. Most market experts are cheering the budget. They're calling it, and Nilesh Shah mentioned that you've delivered the Triveni Singam by managing the fisc, doling out the tax cuts, as well as pushing the capex. But at the same time, retail investors are still thinking, why is it not moving the needle on the markets? There's also a bigger concern. The foreign investors have been continuously pulling out money from Indian stock markets. There's been an exodus. In January alone, $10 billion has been pulled out. Why do you think foreign investors are not getting the confidence in the Indian stock markets or in the Indian economy to put in money right now? What is your message to them, ma'am?
Well, I think India's market and its fundamentals are strong. Domestic situation and issues arising out of it alone cannot be the reason for FDIs to go out of this country. The developments in the US, the global uncertainties, markets like Japan now trying to assert themselves. So many things are happening that FDIs will move as quickly as Mercury would do. So I'm not surprised, but equally, I would want to make India a lot more attractive destination for investment, and that is one of the reasons why in the budget I have mentioned that the BIT will be reviewed and we will come up with a new bilateral investment treaty template, a model agreement with which we'll have more negotiations with countries bilaterally for attracting investment.